3 to 6 months, if not more, because these stocks would take some time to try and get into a reversal mode. But sooner than later, I think these stocks would start a strong uptrend for themselves. So I think it's a good point where you can look to average.
Okay. That's the first query, but moving on to the next one, and Mr. Prabhakar, coming to you, we have a query coming in from Dasaradi, and this one is on Lakshmi Chemicals, is holding 100 shares of Lakshmi Chemicals at 425 rupees per share, and they continue to hold this for a long-term period. And if they are looking to average, should they be looking to average right now or wait for some correction?
Lakshmi Organic Industries?
Chemicals.
I think so. See, the Lakshmi Organic is what they have written as Lakshmi Chemical in my view. I think, this is a good stock. All chemical stocks have corrected, but at current level, we are very comfortable and they can hold. And, maybe, there is more correction in next 2-3 months. Quantities can be added also there.
All right, this next query that I have is from Mr. Singh. He's writing to us from Pune, and he wants to know what sort of, where can he actually, at what level can he look to enter Titan for the longer term? What's your take on this one, Kunal? Titan, at what sort of levels could you enter it? We saw a massive rally yesterday. Do you think now is the right time?
I think it's the right time to enter Titan. You don't expect these large cap names to get into 50% corrections every now and then, and there are very rare opportunities where you see the stocks getting into 20, 30 to at max 50% corrections in the larger scheme of things. Now, if you look at the last 6 month, 8 month charts for Titan from 2,600 plus, to be precise, in the previous high for Titan, the major high was around 2768. So from those levels, the stock is back towards the 2100 mark. So it's almost a 600 point correction for Titan, 30% approximately. I think these are good opportunities where you can look to buy. Now, you can't be able to time it perfectly as compared to buying the stock at the exact lows for themselves. But if you have a strategy of buy and dips starting from current levels, you can probably arrive at a fair price on Titan. So I would suggest a buy and dips approach starting from current levels.
Mr. Prabhakar, coming to you, the next query we have coming in is on the IT space. Now, Omkar wants to know, is it advisable to invest in IT stocks? He's also invested in ICICI Pru's IT sector fund. So would you be advising him to invest further in IT stocks? And if yes, at which stocks would you be suggesting?
IT stocks, many stocks are looking very attractive. I think LTI Mindtree merger, at least for 1 year, it might not perform post-merger. But for a long-term investor, it looks very positive. There is BS Soft and Tech Mahindra, which we have as a buy. Even Infosys, at current level, we like it. IT as a sector, there is a fear that due to recession fears, the orders. Today we have TCS result, and if TCS says that order book is good, the flow is good, then the IT sector can see a reversal. But one should not worry about 1-2 quarters of bad time. That is the best time to buy IT stocks, because in the last 2 years they have given very good return. So there is a pause. So use this pause to buy again.
All right. This next query is coming in from Mr. Kiran Chopra. And yes, good morning to you. He's said good morning to all of us at BNSN. He is saying that he's a senior citizen. He's a long-term investor, and he believes in investing in stocks which can be passed on to the next generation. So he's wishing to invest in a particular counter for the next 2 to 3 years. And Mr. Prabhakar, he is given a list of 6 counters. Out of this, which is the one counter that he can look to invest so that he can pass on to the next generation? And one is Infosys, ICICI Bank, BEL, HAL, or Reliance.
No, all are good stock. It is a very difficult choice. I'll go with ICICI Bank.
And Kunal, if I had to ask this question to you, sorry for that, Vinny, but if I had to ask this question to you, which would that one counter be that you would also advise him to invest in?
Well, again, for me, I think all these 5-6 stocks are very, very attractive. Difficult to try and pinpoint and choose just one of the stocks. So probably I'll also go with the same selection of ICICI Bank. But then possibly, I think if you can expand the funds a bit more and try and invest into all of those stocks, those are very strong quality names, and you can definitely pass it on to the next generation as well.
Okay, Kunal, I'm going to come back to you again, and we have the next query which is coming in on Astral Poly. Now, Raja has bought Astral Poly at 2,200 rupees per share. Should they continue to hold, sell, or average for a medium-term view?
So the charts are not very, very attractive. You know, the stock has gone into a range or a consolidation. The bounce is very meager as compared to the bounce in the overall markets or in the mid-cap space as well. It's just trying to, confine itself into a trading range, unable to break past about the 50-day moving average, even after these last 4-5 days of strong price uptick for the markets as well as for the mid-cap end. So I would suggest to maybe wait and watch, let the stock settle into a trading range. I believe it would probably take some time for the stock to get into a breakout mode. So as of now, you can hold on.
All right, this one is coming from Ms. Sudha, and this one is for you, specifically Kunal, and she wants to invest in Cosmo Films and Raymond for the next 1 year. Could you suggest an entry price for either Cosmo Films or Raymond?
See, I think for Raymond's, we've discussed this. I've discussed this earlier, specifically on previous many shows, that I think it's a good buy on dips opportunity. You can start at current levels, 900. The stock made a high of 1200 plus just about a couple of months back. So you can start at current levels, maybe look at a buy on dips opportunity. A 10% drop on an average from these 950, 60 levels should be a good opportunity. So 850, 750, approximately, if it, assuming if it reaches to those levels, should be considered as two price points where you can look to average. Cosmo Films, on the other hand, is a slightly high beta name. The only concern, or the bigger concern for the stock, is the low liquidity with these kind of stock prices. So you have to have a slightly lesser allocation towards such kind of stocks. You can start buying at current levels, and possibly over the near to medium term, you can look at maybe a 1,020 to 1,050 kind of a target. If you can expand your time horizon to 6 months, 1 year plus, then possibly a 1,200 target could be a decent enough target for Cosmo Films.
Moving on to the next query, Mr. Prabhakar, this one is coming in on BHEL, and this query is from Pavan Kumar. He wants to know, he's invested in BHEL. They've not given us a price. Can they continue to hold this stock for a long-term view, or should they sell it?
BHEL in the last 2 quarters only, they have started making profit. Last year they made some profit. But I feel it is a turnaround candidate. Yesterday, they said in Telangana they have completed 100 megawatt of floating solar panels for NTPC, and in last 10 months they have done almost project for 147 megawatt. So and they say they are indigenously producing it. So that is very positive for BHEL. Now at current price, I don't think anything to worry. But if the stock doubles in next 3-4 years, then you need to take a call, because in the last 10 years their order or their sales have been reducing. They have been in losses. Now only the turnaround has happened. So every 6 months you have to review your portfolio on BHEL.
Okay, this one is coming from Anand, and Anand wants a suggestion on Morpen Labs. He's already purchased about 1,100 shares at a price of 43 rupees per share for medium to long term, but he wants to know whether he should average out by adding some more. Kunal, I'll take this query to you. What's your take on this one? What should Anand do?
See, I was looking at the charts from 2020 lows. The stock was at 7 rupees, if I'm not wrong. From 7 rupees, it jumped up to almost 75. So that's a 10x returns. And now the stock is back towards 37, which means it's completed a 50% retracement on a net to net basis from the 2020 lows. Ideally, a 50% retracement is a good enough support point. So let's wait out for the stock. I think it's finding some good support at this 33 mark, which is exactly at that 50% retracement for the stock price. So you can keep that as a sort of a positional stop loss and look to buy or average the stock.
Okay, let's move on to the next one. Mr. Prabhakar, we have the next query coming in from Hemanta, and now they want to know whether can they continue to hold Praj Industries. They've bought it at 354 rupees, and they're looking to average. So how should they be averaging at these levels, or what should they be doing?
I think Praj, the sugar, capital goods manufacturing. I think that will take a pause. Now in capital goods, we like ABB and Siemens, which have started to outperform the market. I think you need to slightly diversify away from Praj. Now Praj is not a cheap company; it is also expensive. It is better to go in for a MNC name where I think the capex kickstart is starting to happen. So ABB Siemens will give you better return than Praj Industries at this point of time.
All right. The next query that I have is coming in from Rajini, and Rajini is saying that has Indian hotels at the price of around 245 rupees per share, 100 shares of Indian hotels. Wants advice for 1 week, Kunal.
Okay, so I think for 1 week, I would probably expect the stock. See, Indian Hotels is not a stock which moves into high, I would say bursts of, strong momentum. It's a stock which is getting into very slow, steady moves for itself. Even if you look at the weekly charts or the monthly charts, the stock took a lot of time to try and come back from 220 levels or 210 levels to now 240 plus where it's currently trading. So it's a stock which tends to get into a 1 week, 2 week up move and then a couple of weeks of consolidation. So this week's the stock is up so far, I think if I'm not wrong, 8% or 8.5%. So possibly the next week the stock may try and consolidate. So my view is that it's a stock which should be held on from a longer term play. For the next 1 week, I would expect the stock to consolidate in this 240 to 250 band.
The next query we have is coming in on Redington India, and this query is from Debidas. Mr. Prabhakar, they want to know whether they can buy this stock at the current market price with a long-term view of 3 to 5 years.
This company is a major marketer of iPhones in India. But we need to understand their margin is hardly 2.5–3%. So when you have very low margin, if there is a bad time, then they can get into loss. So I like business which have very high margin. At least 8 to 10% should be the average margin. But 2 to 3% margin for a long term I would not take. But for short term trade, 6 months to 1 year, you can look at it. But I am not a person who will look at where it is only a trading opportunity. I will not look at it for a long-term investment.
This query that I have is coming in from Neela Magima from Chennai, and Neela is retired and is looking to stay invested in the markets for a long term, and she's looking for a 5 to 10 year investment. The counter that she's identified is IEX, so she wants to know whether it makes sense to enter IEX right now, or when is the right time to enter IEX altogether. Mr. Prabhakar, do you think IEX is a good bet for the next 5 to 10 years, given the fact that now it is actually facing some sort of a competition with 2 new exchanges coming in the power segment as well? And it's not only Neela, I have a couple of other viewers also writing on IEX. What's your take on this one?
Yeah, no, the competition was known in the market. That is why the stock has corrected more than 50%. At current level, for a long-term investor, I think it is worth slowly buying it. But do a SIP for at least 10 months or 12 months so that you get a better average.
Okay. Kunal, coming to you with the next query coming in on Ambuja Cement call option at 370. Should Mr. Gupta be looking to buy this at, what is your view on this one?
I would suggest to avoid this counter and specifically options on this counter. I think the stock is getting into an absolutely sideways range. The last 3 months, I think the entire month of second half of the month of April, entire month of May and June, the stock has remained to a range 365, 370 is more or less a pivot zone for Ambuja Cement. So if you happen to buy a call option on a stock which is consolidating, there are higher chances the premium gets eroded for such kind of call options before the stock actually gets into a breakout mode. So I would suggest an avoid.
All right, this next one is from I don't have the name of the viewer. Please do mention your names, even though you've written to us earlier. Do mention your name every time you write a query to us. This one is for you, Kunal, though, and the viewer wants to know whether should exit Yes Bank. The purchase price was 12.8 rupees per share, and look to invest in Federal Bank. Do you think that this strategy really makes sense?
Well, it does make sense, a lot of sense. I would be of the belief that I think it's time to move on from Yes Bank to other names. Just because the stock is available cheap or at 2 digits or because it's been historically beaten down doesn't indicate any kind of a rationale to try and buy the stocks. Over the last 6 months to 9 months, the stock has remained in this tight range. You might have those trading opportunities in between where the stock gives you a pop of 5%, 10%, or maybe 20%, given the kind of market circumstances. But then, it may not add any, major constructive returns to your portfolio. So you have to make that switch. I think it's a good time. You can look at Federal Bank, and I would probably suggest even, possibly looking at City Union Bank. I think both these charts are emerging as strong breakout candidates for themselves.
Okay, and on that note, we're going to slip into a very short break, but do stay with us, Kunal, as well as Mr. Prabhakar. We will be taking more queries after this very short break.
Question that you asked me, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing, and you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's continue and keep it going with the queries. Kunal, I'm going to come to you. We have a query coming in from Jayaraj Shetty. Now, they bought Kajaria Ceramics at 911. What is the short-term target for this one?
I think it's a good price where you've bought 911. I think, if I'm not wrong, was very close to the previous swing low for the stock almost a month back. So I think it's a good price where you've acquired. Now you can look out for the first target or a test of the resistance. I think 1070 or thereabouts, maybe a 10 points here or there. Could be a zone where the stock may take a resistance. This is the resistance point for Kajaria Ceramics over the last 3 months as well, and there were 3 attempts towards this 1070 mark. So you can probably try and expect that the stock may try and come back to that level at least. And if it manages to break out, then keep that as a trailing stop loss. So 1070 or thereabouts should be a first target which you can consider for the stock.
Okay, this one is coming from Keshav. And Keshav is asking about Apar Industries for the longer term. Kunal, he wants to know that is it a good time to buy, or should he actually wait for some more dip in Apar Industries?
So you can start to buy. Yes, the stock has run up extremely hard. I think the last one and a half odd month, from 600, the stock is almost at 1000 plus in the last 1.5 odd months. From May, I think May is where the stock had bottomed out at those 600 levels. So it's run up quite speedily or quite swiftly over the last 1.5 odd month. You can buy at current levels and then on an average wait out for 15% correction from your initial entry price. So assuming if you buy at current levels of say 1030 odd, the next set of buying you can probably keep it at closer to 900 mark. That could be a good averaging opportunity for Apar.
Mr. Prabhakar, coming to you, we have the next query coming in on Delivery. Now, this is a recently listed company, but Raj has bought it at 546 rupees. Should they continue to hold this one or look to sell it?
These companies are recently listed. The startup companies, they are making losses. So for us also, on what basis to give a buy or sell, it is very difficult. But wherever I meet new investors mainly, they buy into Zomato or TB Infotech, Paytm. These companies, till they stabilize their business, till their turnaround, it is very difficult for us to give a view. It is better to avoid. We need to look at opportunities which are already available. And market, many stocks have corrected 40-50%. Many stocks are looking attractive. So there are opportunities in the market. If you want a long-term buy, I think SBI Life, where the June month new business premium has grown by 60%, is a very fantastic buy. ICICI Bank is there, which I mentioned before. Like that, there are quality stocks which has huge track record, 10 years, 20 years of track record. And those are picks which will give a safe return. Maybe it cannot give a multi-bagger return, but at least 15% CAGR return over a period of 5-10 years, it will happen.
All right. This next query that I have is from Pintu Prasad. He's writing to us from Siliguri, and he's bought Wipro about 200 shares at a price of 629 rupees per share. Kunal, he wants to know, will he get the cost value within a year?
Very difficult because I believe that these IT stocks may take a lot of time. I remember, I think a similar pattern had panned out for these IT names in 2009-10, where these stocks rallied up, went up to, I think, 2x, 3x from those 2009 lows. And then from those 2010 highs, these stocks, they corrected and consolidated for almost a year and a half before the prices started to get into a ferocious subtrend. So I believe a similar kind of a pattern would play out for these IT names. You have to have a longer term time horizon, and I think these kind of opportunities where the stock has corrected 30% from its from your initial cost price or entry price, I think could be taken as an opportunity to buy or average. So I would suggest to average out, but then time horizon of 1 year could be a bit more short term.
Kunal, I'm going to come back to you again. We have the next query coming in from Neha, and this one is on Hindalco. Now, she's holding Hindalco at an average price of 458 rupees. So she is making a loss as of now, is what she's written. Should she average for the next 3 to 6 months as a holding period, or should she wait for more correction?
See, I would suggest to wait out for not more correction, but the factors which affects the stock price on the metal side to become a slight bit more positive. Right now, there is a lot of negative across many of these factors affecting these metal stocks. So till the time those factors they don't start getting into a reversal mode, I would suggest to wait out. possibly wait out for maybe the next couple of weeks if the factors across the globe, for example, the metal names, something on positive on the China front, if all of those start, coming back into the markets, then there could be a point of a turnaround for these metal names and specifically Hindalco.
Okay, this one is from Mr. R.K. Ahuja, who is a long-term investor, and he wants to know whether he should look to exit NIIT Limited and Zomato. He's bought both of these counters, NIIT at a price of around 470 and Zomato at a price of 70 rupees per share. What's your take, Mr. Prabhakar?
Yeah, NIT, I'm not a fan of that. There are better picks in the age tech is something where I will avoid. So IT is a better space. So LTI, Mindtree, which I mentioned before, and Zomato, I said, maybe in the next 5 years, whether they will make profit, the company itself will not know it. It is a very difficult business, and if competition comes, they have to burn cash for more time. So I would take companies like DMart or Trend or Titan, which are in that similar space, or Jubilant Food is a profit-making company and which is corrected. It has also a delivery business because they deliver. So if you want something like that, I think Jubilant Food is a better bet. It has corrected almost 40% from the highest level, and it looks attractive for a long-term investor.
Kunal, the next query we have is for you, coming in on Hinduja Global Solutions. This query is from Ganesh. He's holding 44 shares at 1,130 rupees per share. Should they buy for the short term more, or should they be looking to sell it? What is the view on this one?
So I would suggest to book out profits over here. No, it's a very dicey stock. The last, I think, 6 months or so, there was a lot of negative news flow for the stock price, and which is why you'd seen a correction, very sharp correction coming by from 1800 or thereabouts to, at one point the stock was below the 900 mark. So sharp 50% correction. Now, this could probably be a process of a bounce, for Hinduja Global. So I think in that aspect, I would suggest to maybe book out profits over here and then wait out for the stock to try and consolidate for at least the next 2 to 3 months. That could be a better point. The stock would probably offer a better point to try and, be bought back again. So maybe closer to 1,000 mark or below that, I think would be a good point where you can look to start rebuying.
All right, this one is coming from Reema. Reema is writing to us from Pune, and she's bought 60 shares of IRCTC at the price of 920 rupees per share. Now the counter is near all-time low. Is there some hope of the stock going higher? Kunal, yesterday also we did talk about IRCTC, but for the benefit of Reema, what should she do?
See, I think IRCTC is coming back towards its mean behavior. 2020-21, as we were discussing earlier, that was an exceptional year for IRCTC. The stock, rose up or moved up from, I think, 300, 400 levels to at one point 1200 plus. Adjusting for the special situations, and now the stock is back towards that 580, 600 mark for itself. So I think the stock is now trying to find its mean around the 600 mark. It should consolidate over here. You have to have a longer term time horizon for a stock like IRCTC. So at least 2 to 3 years could be a good time horizon, and if that's the case, then you can look to average at current levels.
Okay, Mr. Prabhakar, we have the next query, which is on Happiest Minds. Now, Joseph has bought 50 shares of Happiest Minds at 1,160 rupees. What should they be doing with this one?
It is a good stock, but a bit expensive. So the weight is slightly higher compared to other stocks, but I think Happiest Mind is a hold from my side.
All right. On that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. Hang in there, gentlemen. We'll be back and we will take some more queries after this break, so don't go anywhere.
That you asked me, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing, and you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story.
The micro SUV segment. That in the second half of the year was an industry size of 14,000 units per month. Then what you see is the less than 4 meter compact SUV segment, and there the industry size is 51,000, and you can see the brands we have, and the full size SUV, which is 63,000 per month. We're very strong now in the compact SUV with the Thar launch, the 300 launch, the Bolero Neo and the Bolero. With Scorpio N coming in, we would expect the greater than 4 meter SUVs to become stronger by way of market share. We've just put for reference below the number of brands, competing brands in each of these segments. And what you see in the last row is the success rate of other new launches. It's for the same period. So launches in the last 2 years, sales in H2 of F22, comparable period. Average sales of new launches, 3,400 per month, 1,700 per month. And compare that with the kind of bookings that we are getting and the kind of sales that we are getting. Again, reinforcing that we really are now a very strong and formidable player in the SUV segment. The SUV segment itself is now a significant part of the passenger vehicle market. As you can see from SIAM projections and even where we are today, the SUVs as a percentage of total passenger vehicles in the region of 50%. So we don't play in a niche segment. We play in a very significant segment, which is the SUV segment. And in that segment, we are the #1 player by way of revenue market share with a very, very strong portfolio. There are several reasons why SUVs are doing well. Clearly, consumers want stylized presence. They want that feeling of being in seating height control, newer tech, safety, greater performance. We believe the SUV